Also joining us today will be Josie Collins, who's the Director of Resource Development and Donor Relations with National Credit Union Foundation, and also Tom Walker, who is our President and CEO of Members Trust Company. Today we're going to give you some additional background information on the foundation as well as Members Trust Company, and then really focus on the three investment options that we offer to help support the foundation. We'll start off, and I'll introduce Josie here, and she can talk a little bit about the foundation.
Great, thanks Jason, and welcome everyone. We don't have enough time today for me to go over all the great things that your state credit union foundation supports, but I can tell you about NCUF. Our programs and grants help consumers achieve financial education, and so how do we do that? It's pretty quite simple through our commitment to supporting financial education. And our national programs such as Real Solutions, which works in 40 states, hopefully a state that you are in, to help credit unions offer affordable and sustainable services to the people who need it most. Credit Union Development Education, or DE training, as we call it, which is our biannual educational program promoting credit union philosophy, cooperative principles, and social responsibility. Financial education grants. This is where we fund innovative projects that help improve the financial capability of American families. CU Disaster Relief. Raising disaster relief funds in times of disaster from credit union people to help other credit union people. We had 3 just this past year, and hopefully the hurricane doesn't hit the East Coast and we can avoid another one. And many of you probably have heard this already, but in case you haven't, we recently took over the administration of BizKids, which is the Emmy award-winning PBS show in all 50 states that teaches kids about money and business. So it's a very, very broad overview, but you can learn more about what we do at ncuf.coop. And to fund what we do at the National Credit Union Foundation, we use our funding from the Community Investment Fund. And with that, I would like to turn it back over to Jason, who will talk about a new investment option in the Community Investment Fund. Jason?
All right, thank you, Josie. I'll start out and just briefly talk a little bit about Members Trust Company and our background. Members Trust Company is a national cooperative among credit unions. We're owned by over 40 credit unions and credit union affiliated companies. We are supervised by the Office of the Controller of the Currency, the OCC, as well as the NCUA and FDIC. Typically we provide trust and investment management services to credit unions and their members. And that's really the national cooperative goal that we have. Currently we manage over $700 million in assets. That's both credit union membership assets as well as credit union capital and institutional business. Recently you may have seen in Credit Union Times or in other publications that we have announced a merger with BECU Trust Company, Boeing Employing Credit Union in Seattle, Washington. And then, once that merger goes through, pending regulatory approval, we'll have nearly $900 million in assets under management. So with that, I wanted to just start discussing the 3 options that we have to help credit unions support both the national foundation as well as their own individual state foundations. The first option we have is federally insured CDs. This program offers FDIC insurance up to $50 million. So basically how it works is if a credit union invests $2 million, let's say, we go out and funds are placed at individual depository institutions less than the FDIC maximum for both principal and interest. And so what that does is it allows the full amount to be covered by insurance. Even though it's placed at separate depository institutions, it's one rate as well as you get one consolidated statement. So from an operational standpoint, it simplifies things quite a bit. We have maturity options of 12 months, 2-year, 3-year, and 5-year maturities. We can place funds at any one individual maturity, or we can work with you to kind of build a laddered portfolio or a barbell portfolio based on where the rates are and how the credit union wants to invest the funds. Interest is compounded daily, and there are penalties for withdrawal. Now, with the CD investments, it's similar to the other CD options out there. It's a portion of the interest that the CD pays that gets donated to the foundation. So it can be 50%, 75%, or 100% of the interest earned would go to the foundation. And the credit unions have the ability to designate specific CIF funds or to designate just the general fund. The second investment option that we offer is what's called a charitable investment trust. Now, what the goal of the charitable investment trust is that we expand the investment opportunities or the investment assets outside of just simply CDs. Now, this is a conservatively managed portfolio. It's only 703 permissible funds, so the same asset classes and security types that credit union capital is invested in. So it's very safe portfolio of fixed income securities. The permissible investments are U.S. Treasuries, U.S. agency bonds, can also be invested in mortgage-backed securities, high-quality municipal bonds, as well as some other investment classes. And we'll go through here in a minute kind of the target for this type of an account as well as our investment philosophy. For the charitable investment trust, donations can be either a flat dollar amount, so each year it would be a flat dollar amount that gets donated to the foundation, or it can be a percentage of the overall value of the account. So a little bit different than CD investments, they have those two options. Again, this agreement can be terminated at any time by the credit union, and unlike CD investments, there aren't any withdrawal penalties if this is terminated. We can either deliver the securities that we invested in back to the credit union, or we can sell those securities and deliver the cash proceeds. Because it is more of a portfolio and there's management of assets involved, it's important for the credit unions to know the investment team that we have here at Members Trust Company. We have an experienced investment team. We have 4 CFA charter holders on staff, headed by John Largent, who's our Chief Investment Strategist, Kate Braddock is our Chief Investment Officer, myself, and then Sheldon Reynolds is also a CFA charter holder. The Chartered Financial Analyst designation is kind of the most prestigious in the investment community. And having 4 CFA charter holders is pretty rare for trust companies and investment firms within the credit union industry. As an investment team, we have a conservative investment philosophy that one comes from being owned by credit unions and the kind of conservative philosophy that credit unions themselves have. And the best example of that philosophy that we have was in 2008. We were highlighted by Forbes.com as having the top portfolio because, as we all remember what happened in 2008, the stock market in general is down over 40%. Our most conservative portfolio was down less than 1% in that time. And so that kind of goes to how we conservatively invest money, and that really dictates these portfolios that we would be managing. The investment policy for this charitable investment trust, and again, these are the 703 permissible investments, so very safe fixed income securities. We do provide active management, so it's not a buy and hold strategy where we just buy one bond and hold it until maturity. We do manage it based on where we see the markets heading, and I'll get into more about that here in a little bit. But it's not a buy and hold, but that doesn't mean that we're trying to day trade the account or have excessive trading. We believe in long-term investments. We're long-term oriented, but that doesn't mean over the shorter term and medium term that there aren't times when portfolios should be adjusted based on what expectations are for the future. So when we actively manage a portfolio, some of the things we're looking at is for fixed income is duration and yield curve management. So that means is we look at where interest rates are, and we determine where we feel interest rates are going to go. And based on that, we choose where in the fixed income universe, you can buy 1-year bonds or 30-year bonds at the extremes, where in there do we want the average maturity and the average duration of the portfolio to be. And that will change as the interest rate environment changes. We also will decide what percentages of the different asset classes between U.S. Treasuries and agency bonds and some of the other fixed income asset classes should be invested in the portfolio. And a lot of that is based on, again, kind of our forecasts of economic conditions as well as interest rates, and then where we feel that the portfolio can conservatively be invested, still earning a return that's traditionally higher than what CD investment returns are. And that's really the whole goal of this investment trust and expanding it out to 703 permissible investments, is that we can earn an incremental return without having to take on a lot of additional risk. And that's really the goal here. So when we're managing this type of portfolio and working with the credit unions to decide where to invest, we use what's called an investment policy statement. And that investment policy statement will provide the guidelines that we manage this portfolio. And this is where we can really customize it based on each credit union's preferences. The kind of traditional portfolio will have a shorter duration of 2 to 5 years. We'll have a target allocation in U.S. Treasuries of 40%, 45% in U.S. agency bonds, so again, very high quality bonds, and then a 15% target in other 703 investments. So that could be, again, high quality mortgage-backed securities or possibly municipal bonds or collateralized mortgage obligations by the GSEs. And again, this is where we can work with a credit union and do some asset liability matching and really tailor this portfolio to what the goals of the credit union is and how they can best support the foundation. The third option we have is what's called the charitable lead trust. And what this does is it takes the charitable investment trust that can invest in 703 investments and expands that a little bit further. And so the charitable lead trust can invest in, again, it'll invest in predominantly high quality fixed income securities, but then we can also introduce a small equity allocation, so in stocks. And this is really when Forbes highlighted our kind of conservative management style. This is the portfolio, our income ETF allocation that was ranked #1. And the idea of this is, again, to earn an incremental return, but with a conservative investment philosophy behind it. So right now, this charitable lead trust is pending NCUA approval, and Tom can talk about that a little bit more here when we open it up to questions. But we have had preliminary discussions with the NCUA. And if we look again,
I will comment on
Yep.
that now.
Sure.
We met with Robert Fenner, who was the general counsel of NCUA, in June about this, and just this week we got what appears to be a favorable opinion that this is a permissible vehicle for credit unions to make a charitable contribution to the foundation with. So we hope that this final opinion will be out within 2 to 3 weeks, but it looks very good that NCA will approve the charitable lead trust. Thanks, Jason.
Yep. Yeah, and again, this portfolio, again, it's conservatively managed, and we can see that looking at this is the return history as of 6/30. Specifically, I show folks that 2008 number down 0.76%, because, you know, of course, dealing with this type of an investment and for the foundation, we want to have a conservative bias to this, and that's kind of what this shows. Comparatively, year to date here, this portfolio is up 1.86%, compared to, you know, if we look at the general stock market, is down about 8% as far as the S&P. So again, it's a conservative investment portfolio, but the idea is that the returns on this investment can really offset the donations that's made to the foundation, and in fact help the credit unions to increase their donations to the foundation, and it provides a more stable funding mechanism for the foundation itself, and that's really what the goal is here. So with that, I'm going to leave the slideshow on my contact information, but we're going to open it up to some questions here.